There's been a ton of media attention lately on the investment activities of BlackRock and a few other institutional investors. These companies have very aggressively started buying thousands and thousands of residential homes for their real estate portfolios. Many critics are arguing that these activities are depriving Americans of the primary way in which they're able to build wealth throughout their lifetimes, which is owning a home for a lot of people. Others are going even further than that and saying that BlackRock is doing these things with malicious intent, with the hopes of in the future building a monopoly on where people live. In this video, we're going to cover why BlackRock and some others are buying so many homes, what the effect of this has been and could continue to be on the already hot housing market, and what the possible implications will be of major financial institutions controlling the rent payments for millions of Americans. There was a specific thread on Twitter that got a particularly large amount of attention about these activities. So let's set the stage for a minute. A bidding war breaks out in a new subdivision of a popular northern Houston neighborhood. A local developer built the 124-home neighborhood with the intent of selling these homes to the public for a profit. They were extremely surprised to receive a bid on all 132 homes for $32 million, which was much more than they felt they would have been able to sell the homes for through individual sales. The buyer was Fundrise, the popular real estate investing app. This Twitter thread and the resulting social media traffic made #1 on the Wall Street Journal's list of online media. The Atlantic did a really long write-up covering this specific situation, but also a handful of other scenarios that are really personal and individualized and emotional about people not able to buy houses because institutional investors are placing higher bids than they are. It was a very well-written article, but also pretty obvious that the author was trying to elicit very negative emotional reactions from its readers towards these activities from BlackRock. They told a story about a newly married couple with a couple kids who wanted to move into an area with a preschool that they really liked. They covered a really elderly person hoping to just live comfortably in their final years of life. You can check out the paper for yourself, but there are many other instances of people who wanted to buy homes and were not able to because institutional investors are just paying so much more than regular people can. They can also make cash offers and they can close in like a week, so it's really just not all that competitive in some situations for residential buyers. In addition to all these published articles, a lot of people have been talking about this stuff on Reddit and Facebook and Twitter and TikTok, and the article that most people are referencing back to is this Wall Street Journal article from beginning of April. Now, I can't include too many clips from this article just because the Wall Street Journal is a paid subscription service, so if you have a subscription, you can check out the full article yourself. But to summarize it, the Wall Street Journal article covers just exactly how much money and how many homes BlackRock and certain hedge funds and pension funds and other institutions are buying right now. It relates this to a lot of the institutional investing that was done between 2011 and 2017 after the housing market crash of 2008 and 2009, and also offers some opinions on how this investing activity actually probably will be profitable for these institutions in the future, even though they're going to have extra costs like property taxes and paying property managers to get things done. Then Vox published an article kind of defending BlackRock. The author said that BlackRock isn't the reason that home prices have been increasing so drastically in the US over the past 6 months. They claim that the cause of the current housing market is because of a shortage of housing due to issues created within local governments and existing homeowners seeking to block new homes in their areas being built. They really didn't present much data to back up those claims, and I also just don't think those two issues sound like they are things that could impact the market on such the scale that it is right now. But I can share an example from firsthand experience about a group of neighbors who really did not want a residential development going up near their homes. In the neighborhood that I live in, there's like a 4-acre wooded area. A residential developer bought this. They were going to take out some trees and construct 6 very new and modern looking homes, but the local neighbors protested this activity as much as they possibly could. So maybe Vox is onto something there. I just don't see those factors being significant enough to create the housing shortage that we're seeing today. One of these media outlets says that they actually surveyed people in areas in which a lot of institutional investors are buying some of the residential homes, and they claim that the results of their survey showed that about 40% of Americans are fearful that a major financial institution is going to prohibit them from being able to buy a home in the future. Now, I'm a little curious about how they got this data since the whole backlash against institutions investing in residential real estate is so new, but anyway, they said it was 40% of people are worried about this. So let's talk about this from an investment perspective. If you're BlackRock and you have $85 billion that you need to put to use this year, why are you even investing $30 or $50 or $100 million into a block of residential homes? It's not going to make that much of a dent to your portfolio. And if you check out any of the articles that I've referenced up to this point in the video, you'll see varying opinions on these things. My belief is that it's really in the search for yield. Because interest rates are so low, and some people would argue artificially low, held down to a certain level by our Federal Reserve in the United States, investors are just not happy with what the Treasury bond or the corporate bond market is earning them. And even though residential properties would probably not be the first first choice for many of these institutions because they create logistical difficulties like managing those properties. It's still a relatively attractive asset class, even with the current historically high prices of housing in the United States and the cost of property management. The return that they can earn in monthly rents from these properties ends up being a pretty good return on their investment. And while I don't think any financial solution would be intentionally malicious through this activity, they certainly will be able to leverage their market dominance in a certain local area to increase rent prices when there's not going to be as much competition. So in a way, it's a little bit of a local monopoly. Also, from an investment perspective, I think these investing activities from major institutions could signal that they believe that the housing market is not at the top of a bubble and about to crash. Even though housing prices have gone up considerably throughout most of the United States recently, these smart money investors, which is what institutions are often called, are not going to be buying assets that they think there is a relative likely chance that they would be declining in price in the near future. So again, as a secondary point, I believe that some of this investing is signaling to other people that, hey, the institutions don't think the housing run is over quite yet. Now, they're also probably not looking to flip these houses or entire neighborhoods or entire cities, so it's not like they're making a short-term housing play. You could argue that they may still believe that housing prices will go down, but they're just not worried about it because they're going to hold these assets for 10, 20, 30 years and collect rents from them. That may be a fair argument, but BlackRock in their letter to investors recently made mention to some of these investment activities, and they did not say anything about trying to shift the direction of this plan long term. To me, it just does not sound like they're going to try to become some type of massive residential real estate manager in 30 years from now. It could be worth mentioning in this video also that some of the arguments against BlackRock doing this say that,
well, they're funded by the Federal Reserve, so this is really just our central bank trying to control our home.
That statement, to me, is just a dramatization of the role that BlackRock played for the Federal Reserve throughout the last couple of years. It is true that the Federal Reserve started buying corporate bonds through ETF vehicles. They used many BlackRock ETFs to do this, but BlackRock also had to deal with them where the expense ratios were 0.00 at the time. It's really hard to tell if that deal is still ongoing, so maybe someone in the comments down below could let us know. I haven't been able to find any information on that. But the point is, the Federal Reserve is not funding BlackRock. They just have a little bit of an agreement with them to get funds invested. Now, I'm sure Larry Fink and BlackRock are fond of these activities by the Federal Reserve. Who would not like tons and tons of assets flowing into their funds? Even if you're not making money off it, the volume looks good. But still, it just seems like a conspiracy to me to say the Federal Reserve is trying to take over residential housing. My final point here is that what these institutions are doing in the residential housing market is not any different, and actually to a far lesser extent, than what they have always done in the commercial real estate market. If you're driving down the interstate and you look at the skyline of any major city, very, very few of those large buildings are going to be owned by individuals, families, or local developers. They're almost exclusively owned by major private equity firms or large real estate investment firms. Now, I understand that my point here does not discredit the argument about people being deprived from their ability to build wealth, because owning a home is one way to do that, but rather I'm saying that the commercial real estate market is still competitive. It's not like these major firms owning properties has given them the ability to totally dictate what rents are going to be. People can still shop around for rents. So the same supply-demand principles will continue to apply for residential housing too. If BlackRock bought every single house in a certain town and doubled the rents, people would all leave the town. The town would collapse and fail, and BlackRock's total investment would be absolutely worthless. So economic realities are still going to apply to these major financial institutions, even though they might have larger market shares than most everyone else. There's also another major investment headline out there right now, which is having the total opposite effect on the general public. As much as people now know that Larry Fink and BlackRock are an evil financial institution that are going to take over the world, they are equally as grateful and thankful to Vanguard, who has recently announced new investment activities of their own. Through a deal with Joe Biden and the EPA in the United States here, Vanguard has started to structure financial instruments in which they buy up all of the oxygen within our atmosphere. Vanguard took all the assets that they manage out of their ETFs and index funds, about $3 trillion, and gave that to Joe Biden.
I'm laughing too. They actually,
In exchange, Joe Biden and his friends at the EPA gave Vanguard the entire royalty rights to all the oxygen in the nation. So millions of fans of Vanguard's indexed funds have taken to the Our Investing subreddit page to thank the wonderful and holy Vanguard for allowing us the ability to breathe their oxygen now. Much like property taxes, we will be paying a bill to breathe Vanguard's oxygen once every 6 months. They'll send it to you in the mail. It's basically calculated on the size of your mouth and the size of your lungs. They're just going to use the data from all of our iPhones to tell exactly how big our mouth and lungs are, and then using the microphone on our cell phones to determine exactly how much time throughout a day we spend talking, they can calculate exactly how much oxygen we use. Vanguard estimates that they'll be sending each American a bill for somewhere between $8,000 to $15,000 every 6 months. And if you ask me, 30 grand a year is a pretty low price to be able to continue to inhale the precious element that allows my heart to keep pumping. So I am also very grateful of Vanguard for allowing me to continue to live. If you've gotten to this point in the video, it means that you watched the whole thing. You know, I appreciate it. Please like this video and subscribe to the channel, and the long watch times are great for the YouTube algorithm and everything else. I appreciate you very much. As always, thanks for watching.